Dharmesh Kant of IndiaNivesh Securities is joining us right now on the show. Dharmesh, what's your take on some of these housing finance companies? Disbursements and the projection of disbursements rather more encouraging. Canfin Homes talking about a 20% disbursal rate. That obviously, in a way, also talks a little bit more about the health of the industry and how it's shaping up.
Yeah. See, whatever checks we have done on the ground level, what we have noticed is tier 3 and 4 kind of cities, there has been a traction in housing, especially affordable housing segment. So low ticket size kind of a housing has been doing well. And Canfin Homes, LIC Housing Finance, PNB Housing Finance particularly caters to this kind of a segment. I mean, from ticket size of 5 lakh or 2 lakh to 15 to 20 lakh kind of flats which they cater to. So that segment has done well. And again, there's a disconnect if you go by the numbers which banks have reported on the retail side. So there was a deceleration in the growth. I mean, retail consumption has been slowing down, but housing finance, as far as affordable housing segment is concerned, there has been a traction, and Canfin Homes number are evidence of the fact. So these valuations were pretty cheap, and going forward, as credit cost is unlikely to rise because the delinquencies are lower, and the guidance given by the management was quite robust. So I think that has taken place. The stock price has been moving on that count, and in this market, you have very few pockets where you can comfortably place your bets where valuations are comfortable, and the picture looks rosier on the going forward for at least 1 year. So I think the traction we are getting today is more on account of that. Having said that, my top pick in the segment still remains LIC Housing Finance. So we have recommended this stock quite low at 390, 380 kind of levels when it was trading a couple of months back. And I think in the present scenario, that's the more stable bet to play on the housing finance segment. Overall, the sector does look attractive to us.
Dharmesh, we've had a whole host of private banks coming out with earnings, the leaders. By that I mean HDFC Bank, Kotak Mahindra Bank, IndusInd Bank. What have you made of the earnings so far? We've clearly seen a lot of weakness after they reported the earnings. And how would you assess the outlook for some of these banks going forward?
Yeah, I mean, to put it harshly, the outlook looks quite scary because on all the accounts, the earnings which they have reported, be it IndusInd Bank, HDFC Bank, Kotak Bank, that doesn't look a very rosier picture. In fact, the segment, the retail segment, which was doing particularly well for the last 2 years, and that was the driving force behind all the banks. That is getting decelerations is seen out there. And that's a big cause of a worry, because the entire thesis of this economic, upturn or green shoots or revival, which was on the basis of retail will pick up in a greater way, and that will lead to private consumption, which looks as of now the question mark is there. And the deficit of government of India as far as revenue is concerned, it's getting low. The tax projections which are there, although it's not confirmed yet, but it will be low, and given the corporate tax rate cut which the government is given, it has to be that way. The earnings which most of the companies have reported, if you look at the bottom line, it is primarily because of the taxation advantage which they have taken. So I do think that something magical needs to be done by the government in the budget to pep up the economy. Otherwise, hard times ahead. So we may get trading blips of a couple of percentage point on individual stocks. But my own sense is that given how the valuations have been, how the corporate loan growth has been, and how the retail is now decelerating, there will be a tough time ahead for banking space to carry on from here, and that needs to be addressed. And I'm not very clear how this issue will be resolved in a near term. Maybe a year from now there are chances, but as of now, it's more of a exit kind of a space for private banking from our decks.
All right. I should look at InfoEdge as well. The stock is trading higher after, Zomato signed a definitive agreement to acquire Uber Eats. That's Uber's food delivery business in India in an all-stock transaction. The stock's up closer to 1%. It was up about 3.5% in early morning trade. Should try and get the management to talk a little bit more about the contours of this deal and what this does to InfoEdge's stake in Zomato. But that's in a few moments from now. What's your take on InfoEdge, Dharmesh?
See, See, given the valuation at which it is trading, I think it's fairly valued. But the management has been pretty aggressive in taking the other areas of business forward, like this present acquisition of Uber Eats by Zomato, which is indirectly, a minority controlled by InfoEdge, is again a step in the right direction. So I do think if the corrections are there, the company has seen a turnaround in the numbers. This year has been good for the company. So one should be a buyer and investor in InfoEdge. Trading perspective, I don't know how long it will hold, but given the scope of opportunity which is there, and in this delivery model system, it will be more of a duopoly as of now. So it's a positive for InfoEdge.
All right, so as far as InfoEdge is concerned, this is just a part of one of the many acquisitions they have done. If many would consider this as a private equity proxy, because what the company does is that while it does have Naukri.com and something like a Jeevansathi, or for that matter, something like 99 Acres, InfoEdge has the advantage of being invested in several of the other non-listed entities, which gives it an edge. Which is why at least some analysts on the street would suggest that the valuations at which InfoEdge is currently trading at is, valid. That said, we also have to consider that a lot of these companies are not necessarily profit-making, and neither is Zomato. And when Zomato goes ahead and acquires something like Uber Eats, it's not only going to require more capital, but there is a chance, and a very big chance, that it could also put pressure in the near term when it comes to InfoEdge's consolidated income statement. That said, we all know about the tremendous presence that Zomato has and the kind of value that it can eventually bring to InfoEdge, and that is exactly what a lot of these investors are factoring in right now, as far as InfoEdge is concerned. Currently trading,
So Agam, just to get a sense, this is obviously with Zomato and Uber Eats. Now, Uber Eats is about 12% of the food delivery market. So this obviously is the added niche that it can get with the acquisition of the business in India.
Yeah, and especially if it is going to be competing with something like Swiggy. We always knew that Uber Eats was up for sale, and we always knew that if it wasn't going to be Zomato, it was going to be Swiggy. It's just Zomato's advantage right now. It's something to do with why Facebook would acquire WhatsApp. They may or may not see value right now, but eventually those advantages will start coming through, and that's exactly what Zomato is playing out here. It may be a very small acquisition, but 12% market share today, and eventually it could grow to a lot more. And of course, operations are in place. The only concerns the investors may have is the kind of cash burn that Zomato is already seeing, and it may require to shell out more.
So is it probably a better thing than that it's an all-stock transaction instead of any cash involvement? $300 to $350 million is what they're saying is the deal value.
Yeah. That's how much it's valued at. Well, it's going to be a wait and watch, and I'm sure that for Sanjeev Bikhchandani, he is one person, at least as far as the street is concerned, he would get the best value out of the deal. Of course, he does not directly own Zomato, and in this case, Zomato is owned by many other investors. But I reckon that at this point in time, at least the street is giving it a little bit of a thumbs up. But again, it's an indirect play when it comes to the play out in terms of the income statement, and it's going to have a long gestation period. We all know about that when it comes to InfoEdge. But let's do a chart check too. Sachidanand, if I can come to you on InfoEdge, how are you looking at? Well, it has been trading within a narrow band over the past few weeks. What's your view here?
Well, first of all, it's in a very strong secular uptrend. In fact, if you look at the entire, weekly chart, we have seen a series of higher tops and higher bottoms getting continued. In the last 15 weeks, we have seen it consolidating, but, it seems that the base is now shifted towards 2300, and probably in case someone really wants to invest in further, they can still do it. 2300 is would be a probable stop loss from a trending perspective. Though we're really not seeing any firm breakout getting established right away. But I think the stock may consolidate a bit more, and probably eventually we may see levels close to around 3,200 going forward. So definitely an investment stock, but not a trading one. 2,300 should be the stop loss for the trade, and any consolidation within 2,650 to 2,400 should be utilized to trade longs.
Right. Dharmesh, just coming to you on the auto space right now. I mean, we just heard from the president of the FADA with regards to new registrations coming off. January may be a month where you do see a slight bit of a pickup, but again, there are no, really material green shoots in sight to suggest that things are really picking up on ground. Do you feel that this lag in the auto space is likely to continue for some time into FY20 before we actually start seeing any reversal?
Yeah, I mean, couple of months we are away from the auto space actually bottoming out as far as two-wheeler, three-wheeler or passenger vehicle segment is concerned. But this is a time to get invested into the auto space because stock prices are ahead of when the numbers actually turn around. So as of now, what we think is January may still be sluggish. The numbers won't be good. That is what the dealer checks are suggesting as of now. But February onwards, you will see traction picking back into the entire auto space. And so what we are advising our clients is to get invested in a staggered approach. And the space which we are liking is basically two-wheelers, that is Hero MotoCorp and Bajaj Auto remains our topic out there. And Bajaj Auto's Chetak launch, the electric vehicle will have a tremendous response. So that is what the ground level checks are suggesting. So that again makes a good buy. On the MSCV space, we think that scrappage policy is round the corner. So once that is rolled out, it will be definitely in a piecemeal approach as far as Pan India is concerned, but again that will give a flip to this space which has been languishing for quite some time. So MSCV, LCV and SCV segment will pick up after this rollout, and the infra push by the government again needs transportation of materials to build infrastructure, so that will again push the sales up. So Ashok Leyland is our topic out there. Scots we have recommended way back and it has run up quite high. So as of now, one can take profits or be out of that. So overall, we are constructive on the auto space, but auto ancillary one should wait and watch as of now. So stay away from auto ancillary, but Hero, Bajaj, and Ashok does merit a buy here.
All right, Dharmesh, we'll leave it at that. Thank you very much for joining us this afternoon. All right, back to InfoEdge. Then Uber Eats has just sold its India business to Zomato. The deal in the food delivery app space has been struck at 270